Welcome to this explainer. Look, if you're an entrepreneur, a farmer, or an investor, the last year has probably felt like an absolute whirlwind of tax proposals, tweaks, and sudden reversals. We're cutting straight through all that recent policy noise today to reveal the one massive wealth-building opportunity that actually made it through. Buried beneath all the chaotic headlines of what got canceled is a monumental provision that quietly survived the chopping block. And it's a provision that can literally shelter over $1 million of your hard-earned money from the tax man.
So let's just get right to it and ask the core question every single Canadian business owner has been wondering since these dizzying policy reversals started. Over the last few months, we saw sweeping tax reforms introduced, only to be delayed, and then ultimately scrapped altogether. It left a ton of people sitting at their kitchen tables asking, okay, where do we even stand right now, and what strategies can we actually rely on?
Because it has been a total roller coaster, right? First, back in April 2024, the federal government proposed this massive tax hike, aiming to raise something like $19 billion. The plan was to increase the capital gains inclusion rate from 50% to 66.67% on gains over $250,000 for individuals and on all gains for corporations and trusts. Then, out of nowhere came the January deferral. And finally, Prime Minister Mark Carney just canceled the hike completely to incentivize entrepreneurs. Now, while the politicians argue over timelines, we're focusing strictly on the policy facts. And the fact is, that inclusion rate hike officially off the table.
But here is the crazy part. Amidst all of those cancellations and massive policy rollbacks, one gigantic number remained perfectly intact: $1,250,000. While the highly debated tax hikes were getting slashed, the government deliberately chose to keep this specific incentive, the newly increased Lifetime Capital Gains Exemption limit, firmly in place.
Let's break down what this number actually means for your bottom line. Effective June 25, 2024, the Lifetime Capital Gains Exemption, or LCGE, jumped to exactly $1.25 million. Before that federal budget, the exemption was sitting at just over $1 million. And normally, this limit only creeps up tiny amounts once a year based on inflation. But this historic, immediate jump, it's a genuine diamond in the rough for wealth preservation. It means you can realize up to $1.25 million in eligible capital gains over your lifetime without paying a single dime of tax. To put that into perspective, if you build a business from the ground up and later sell your shares for $1.25 million, your taxable gain isn't cut in half, it isn't deferred, it is exactly zero.
Okay, so who actually gets to use this? Well, this benefit is strictly reserved for a very exclusive club. You can claim it if you're selling qualified small business corporation shares, qualified farm property, or qualified fishing property. Basically, if you or your family actively work a farm or run a fishing operation here in Canada, your assets qualify. But for a vast majority of you watching, the most critical category is going to be those small business shares.
Now, for all you business owners out there strategizing over your morning coffee, you've got to remember the rules here are incredibly strict. You can't just incorporate a random portfolio of stocks and pretend it's a business. Your shares must be held by you or a related person for at least 24 continuous months right before the sale. Plus, during that entire 24-month stretch, over 50% of the corporation's assets have to be used in an active Canadian business. Oh, and here's the real kicker. At the exact moment you sell, that active asset requirement actually spikes up to roughly 90%.
We really have to draw a hard boundary here. While active private businesses absolutely make the cut, assets like your beloved family cottage, publicly traded stocks, or units in investment vehicles like the Skyline Apartment REIT, they are explicitly left behind. They do not qualify. It doesn't matter if your rental property shot up in value by $2 million, you cannot use this exemption to shield it. This policy is laser-focused on rewarding active, hands-on enterprise in Canada.
All right, so how do we actually get our hands on this and maximize the value? Because claiming this exemption means you have to navigate some incredibly specific and honestly, pretty dangerous tax tripwires. The government might be handing you a massive shield, but it is a discretionary deduction. You have to actively choose to claim it on your tax return. And just because you hit that $1.25 million mark on a sale definitely doesn't mean you automatically get the full shelter.
Think of that $1.25 million exemption as a giant bucket. If you've previously claimed a cumulative net investment loss, like say your investment expenses outweighed your income, that literally puts a leak in your bucket, shrinking your available exemption. Same thing goes for an allowable business investment loss. Claim those and your limit drops. Also, you've got to be careful because utilizing this massive shelter can sometimes trigger the alternative minimum tax. It acts as a backdoor way for the government to collect at least some tax at a 20.5% rate. And finally, remember this is a personal perk. Corporations themselves cannot claim the exemption, only individuals and trusts.
Now, this is where it gets really fun. The ultimate strategy here is multiplication. By using family trust and estate freezes, you can transfer the future growth of your business to the next generation, potentially multiplying that $1.25 million exemption across multiple family members. For example, if you set up a family trust to hold the growth shares of your company, and you have a spouse and 2 adult children as beneficiaries, a future sale could potentially utilize 4 separate exemptions. Guys, that is $5 million of completely tax-free capital gains. But keep in mind, the trust has to hold those shares for at least 2 years to qualify. You absolutely cannot set this up the week before you sell.
If you're wondering why this one specific break survived the budget chopping block while everything else burned, this quote from the March 2025 cancellation announcement hits the nail on the head. Prime Minister Mark Carney stated the goal was to catalyze investment and incentivize builders, innovators, and entrepreneurs. It's a highly targeted reward. The government actually wants to encourage you to take the massive risk of starting a business or buying a farm by ensuring your ultimate payout is heavily protected.
So I'm going to leave you with this to chew on for your own wealth preservation strategy. This $1.25 million shield is very real and it is fully enacted. But are you structuring your life's work to actually claim it? Because thoroughly understanding these rules is literally the only way to ensure you don't leave your hard-earned legacy on the table. Thank you so much for joining me for this explainer, and we'll catch you next time as we continue to make the complex absolutely clear.